Okay, good day, everyone. And it's great to have you join us for the first edition of the Castle's Lifestyle series webinar series on real estate in Nigeria. So as some of you would know, Castle's Lifestyle is a publication of Real House Communications, and it has been published now going on 25 years in November. It's also the parent company of both Castle's Lifestyle and Highbrow Living magazine. So it's great to have you here with us this afternoon. This webinar is titled the Nigeria Real Estate Market Review Half Year 2024, and it is going to be a data-driven analysis on the real estate market in the country, as depicted by Northcourt's excellent report of the same title. We'll be delighted to send you e-copies of the magazine and any of the other documents that are presented here for your records. Now, we have three experts today with us who are going to give us knowledge-based reports and their own insights on the real estate market, which I'm sure most of you agree this past year has been as dynamic as the events of the country, both the economic events, political events, not to even talk about what is happening in the world. And so we have today Mr. Ayo Ibaru, who is the Chief Executive Officer of Northcourt. Ayo Ibaru leads the team at Northcourt, which is a privately held real estate services firm in Lagos, Nigeria. He's a real estate investments advisor and consultant to leading corporates. He also serves as an expert source for members of the media and has been featured on CNBC Africa, Arise TV, The Guardian, This Day, and Business Day newspapers. And of course, I must add, we regularly put his reports and his insights in Castle's Lifestyle and Highbrow Living as well. In addition to being a technical contributor to projects and publications by the IMF, Colliers International, Financial Derivatives Company, Oxford Business Group, and Total Multipurpose Cooperative Society, since 2016, Ayo has co-authored widely read periodic research reports on the West African real estate markets, which have won Euromoney awards. He is the host of Real Estate and Investment Markets Brief, a weekly podcast that discusses the West African real estate market. He's a member of the Royal Institution of Chartered Surveyors, the Society of Property Researchers, the African Real Estate Society, and the Nigerian Institution of Estate Surveyors and Valuers. Ayo, you are most welcome to this webinar. Also joining us would be Mr. Akin Opatola, who is an Estate Surveyor and Valuer and is the Director of Origination and Brokerage at Olawale Jordan Company. Mandates include client representation, consulting, and advisory services, and CRE strategy. He's an alumnus of the Federal University of Technology, Min and Niger State, has over 11 years of experience in the Nigerian financial services industry with Polaris and Access Bank PLC, where he rose to become the business manager of Kirikiri Apapa branch. So he has a good understanding of the market from both sides, as well as a very strong financial background. His previous role was the COO of Brokerfield Real Estate Services Limited, where he specialized in property brokerage, property management, and asset valuation. Akin has a great passion for real estate and was elected in 2024 as the Nigerian chapter president of the International Real Estate Federation, Fiabci. Also to be joining us will be Mr. Gbenga Ismail, who is the managing partner of Ismail and Partners and also chairman of the Nigerian Institution of Surveyors and Valuers, Lagos State branch. He will be joining us shortly. Gbenga will be joining us shortly. But I think we can proceed with the report by Northcourt, so that it will form the basis of some of the discussions, as well as the insightful inputs from our panelists. So, Ayo, if you're ready, you can give us your report. Thank you very much.
All right, then. Thank you very much for having me on your event today, and a big thank you to every one of our participants who have taken out the time to be here. I will attempt to go through what has happened in the last 6 to 8 months and make some sort of a projection based on what the data points show. Again, I will, because Mr. Davis has graciously asked that I make this available for the participants, I will send this to him once I'm through, so you don't have to focus on just staring at the slides. You can just listen, and then if you have any questions, I look forward to really engaging and answering them. What I would just say here is a bit of the data might be something of a surprise because it does track what is going on the ground, and I will do my very best to ensure that it's interpreted in a way that you can find actionable. So the first thing I would like to do is talk about the global perspectives beyond what Mr. Davis has already said about who I am, what Northcourt does, who we've worked with, and what we do is really at this point a risk, showboating and trumpeting when it's been said already. So the main point, we'll start with what's going on globally. Why is this important? Because Nigeria is one of the lead destination points for real estate investments in Africa, and by extension, Lagos, Abuja, and Port Harcourt. What that means is if the right project is carefully conceptualized, you will find a market. I was listening to what the previous sessions had around the number of luxury apartments ongoing and being developed in Ikoyi, Lagos, and a few in Ikeja. It shouldn't be a surprise to most people because the resources are there. The fund managers do have allowances in their portfolios to invest in Nigeria's real estate market. The question is always, are the assets good enough and are the returns stable enough? And that's what you have on the screen here. So a global investment management survey was done by a couple of organizations. And in Africa, we have about 3,000 plus investors who have available to invest $30 million US. In Nigeria, the current official numbers put it at $8,200 millionaires. So it's really more around the quality of the products that we have available, be it from residential to commercial. Now, I will be trying to run through all of this under 20 minutes, at most 22, so that we give enough room for your questions and also for any further engagements. And so you find that most investors and most investment managers are looking to invest more in Africa, whether it's commercial real estate investments or whether it's just general real estate investments. And the question now becomes, considering that the demand is somewhat weak as far as Lagos and as far as Nigeria is concerned, the trick now becomes, what kind of investments do I put out in the market? Now, to understand what your buyer or your average user will be willing to invest in by way of rent or taking office space and so on and so forth. So it does make sense at the back end for the investors to put in their funds. You have to understand the overarching performance of Nigeria's economy. And to just give a few pointers, President Bola Ahmed Tinubu of Nigeria continues to struggle with energy prices, food prices, and just the overall challenges around crude oil and energy supply. Dangote trying to do his best to support that. Refinery still working in hiccups as far as things are concerned. Bill Gates came into the country because he's a leading voice in terms of where investment actually goes, speaking country by country to say, look, Nigeria's economy really needs some help. So what this says is the opportunities will be more for the local investors in the long term or in the midterm than for your foreign investors. And that's generally because we have what we call the home investor bias, which is your local investor is more likely to invest in your country, or at least get into agreements with diaspora entities to bring the investment home. It won't be a straight frontal foreign direct investment as far as the economic situations are concerned. Crude prices, exchange rates, inflation, and external reserves all support that. Moderations have been seen in external reserves. Exchange rates still struggling to hold on to the 1,600 naira to the dollar mark. And, you know, when investors are bringing in funding, they're generally coming in the USD route. And then when it's time to repatriate funds, it's generally somewhat of a challenge. And that's what makes quite a number of real estate investments somewhat challenging, even though there are ways around that. Inflation, in the end, influences overall demand, whether it's basket size at retail stores, or whether it's just the frequency at which rent is paid in residential apartments, and so on and so forth. Now, remember, I'm trying to speak a bit to mid-market, mid-income, and maybe more of upper middle income, because luxury isn't affected by most of what you see here, right? The question is just a matter of the quality of the investors. And that's why you find that people always complain and say, why do we have a lot of luxury developments ongoing? And the answer is simple. It's really the easiest to take off the hand of a developer from a foreign direct investment or diaspora perspective. Now, the only thing is there's just so much foreign capital, global capital available than, you know, we are able to create assets that can take that in. GDP growth, construction, and real estate contributions are, as you can see on the screen, not as strong as they used to be. GDP numbers showing something of growth overall, but then when it comes down to your average buyer, it doesn't really reflect. Now, what attracts investments into geographic jurisdictions? You combine transparency indexes, and you find that if you look at the charts on the screen, housing sector's contribution to overall GDP in Nigeria has been growing, but growing gradually. And as you can see, it also mirrors the improvement in transparency. So how much research is out there regarding the market? Is the government coming to take whatever assets you're doing? Are you entitled, secure, and safe? And so on and so forth. So the better the transparency, the more likely we are to see increased investment. Housing construction costs have gone up. It's not news to anyone here. So what this means is we find improved chances of investment as far as high-end projects are concerned. But then when you come to mass market or mid-market developments, you find that they stay longer in the markets, or then rents become a bit difficult to meet up with. And it's not because some of these developments aren't worth the amount of effort that goes into putting them together. It's just that your average buyer can't meet all these marks. I mean, rents have gone up and overall capital values have gone. This is just more on construction material prices. So how has the real estate market performed in Nigeria in the last 6 to 8 months? Well, it still takes us a bit too long to register properties as far as the World Bank is concerned. And things like this don't encourage large-scale, long-term, patient capital funded property. It doesn't. So this is really more of what can be done from a subnational and even from the national level. Like the advertising and marketing of this project has suggested, land prices in Banana Island have continued to go up, and this is just old Ikoyi at the highest points there in the red line. Land prices will continue to go up. Land will always, most times, be a great investment, because when the economy is the way it is in Nigeria, you have what you call a flight to core, So you find that investors are going to what is core in the real estate market, and then around that you also have the flight to safety, because land investment is arguably one of the more resilient when it comes to the overall basket of investment choices in Nigeria's real estate market. So land prices in Abuja over a 5-year thereabout period, on average, has gone up by 63%. Lagos gone up by about 98%. Now, these are average prices around the nodes that we cover. So what does this mean? If you are thinking to invest in land, it's still a good play. If you're looking at land banking, it's still a good play, even though there is now an increased case for farmland investment, which has continued to grow. I mean, ever since you found a number of global investors buying land in the US and then the UK, and that came directly into Africa, even though there is news that Asian investors have been showing interest in Nigeria's farmland real estate market. What you have on the screen will not be new to many of us on this call. Sale prices and land prices across the key nodes that we cover at Northcourt have gone up over the years. Now, back in 2018, the World Bank did come up with a position paper and concluded that Nigeria needs to do 700,000 housing units every year for 20 years. And they also put a figure, an amount to that. And that's because there is just so much opportunity in terms of what can be built for Nigeria now. But seeing that it's really privately driven by developers and so on and so forth, it's upper middle income and upper income developments that have the most volume, and is generally, again, around the main cities. But on the screen here are vacancy rates, which have continued to decrease across the main centers of demand in Nigeria. So Lagos, Abuja, Port Harcourt properties develop well, let's just say conceptualize a certain way, we'll see quite a bit of demand. Now, of course, Lagos is somewhat notorious for having buildings that may not always meet the best standards, but then there's still a lot of demand. And that just shows us the supply-demand gap. So just touching on the northern states, Kebbi, then Uyo, Eket in Akwa Ibom, and of course in Enugu State, we still continue to see the fundamentals holding true. Rental income is still a main reason for developing. So you are on the right side if you optimize for more rooms in city centers. If you want to get higher and sustained rent, of course, proximity to CBD is still a fundamental residential development play, especially when you are dealing with markets where there is a supply-demand gap. For commercial, this is where a lot of the back and forth has been. So for the office market, grade A, where dollars are the primary source of paying rents, you find that there has been a lot of, quite a number of relocations, handing back of space, which we call hand back to landlords. And you find places like Mobile, ExxonMobil, that had stayed at Mobile House for 33 years, had to downsize and leave. They are now in Kara Place, I believe, in Ikoyi. Generally, conversions still continue to be the go-to for many small to mid-sized enterprises, large-scale multinationals, and even large-scale demand for office space in Nigeria have stayed with generally finance and insurance and those kind of organizations. But even then, work a few days in the office and a few days at home. Devaluations of the currency, of course, are one of the main drivers for this reduced demand. So if you're looking at a grade A development at the moment, or that has come into play in the last 3 to 4 years, you are either owner-occupier, or you are dealing with significant vacancies at this point. I did see a report that suggested that the vacancies were not as high, and I could only just smile and go on with my day, because grade A rents right now in USD, even in some of the best buildings, are circa $650, $700 per square meter. Now, retail is doing things a bit better. One of the things that we learned during the pandemic was retail does have a way of understanding what's happening in an economy and how to affect demand for their space before it really becomes full-blown. So you started to see a lot of neighborhood malls. They are doing really well, 3,000 to 10,000 square meters, optimal size of development. A few grade A malls are on stream, and they are generally mixed use. So you have Purple Lekki in Lagos here, and they are largely driven by Purple Group as a mixed use development, even though the retail component is somewhat significant. And then you have the Orca Mall. Orca Mall is ORCA Mall at Eco Atlantic City, and that's also making progress on the back of solid construction work by ITB. Retail vacancy rates for grade A in Abuja and Port Harcourt have continued to reduce, but what you find is the creation of new assets, and that's something that you want to see in an emerging market or a frontier market, because what that means is after a while, we can start to really take the play for REITs a bit more seriously. So the more malls you have, the more work you have for members or stakeholders in the entire real estate value chain. So facility managers, property managers, investors are inspired to build more. And that's one of the main drawbacks of the Dangote refinery. Just going back to that now briefly, already land values around that refinery have gone up. Housing estates, residential gated communities are already seeing a bit more of a green light. And a few other leading investors are thinking of also developing their own refineries. And that alone adds to the overall quantum of assets in the market, and that further increases rates of return. Industrial has continued to be held together by warehousing. And warehousing, especially those along the Lekki-Ekpe Expressway towards the Ekpe end, owned by members of the Asian community, namely Chinese, Indian, and Singaporean contingent. Warehouses now are 97, 98% occupied. Of course, they are built by those who are currently using them, even though Nigeria's local manufacturers continue to struggle with increased power provision and costs of doing business. So on the screen here is the Purchasing Managers Index. 50 is the baseline. Anything above that is good. It means there's more growth, there's more demand. It means land and assets relating to industrial facilities and assets are on the up. Anything below that is bad news, so to speak. Yes, I am aware that quite a number of exits by multinationals were recorded in the earlier parts of the year, but it's what we have to deal with when the currency is not as strong as it needs to be. So what's the summary on this? There is still a strong demand for warehousing space. There's still, and that's of all grades, so that is A, B, C, D, right? Now, of course, there's a premium if you have warehousing space developed for cold storage and for pharma storage. I think it's Cold Hubs who's doing a really good job of creating cold storage in different parts of Nigeria. They're really like maybe the top 3 right now doing it. So that's really where the opportunity is in that. As I come to the end of my time, this is the last slide, I believe. Hospitality, healthcare, PropTech, and a bit more on industrial. For hospitality, subnational governments are showing increased interest in hotels. Hotels have, in a sense, perfected the model of running, even where basic infrastructure is missing. Now, it is easier for mid-market hotels and neighborhood hotels. Now, it's the big name brands that have to struggle with power costs and so on and so forth, which go as high as 60% thereabouts. So if you're thinking of going into a hotel, what you want to do is make sure you stay under 5 floors. Well, 4 floors is even better. Stay in the city, not too far from the airport, and you should be home and dry. But then, of course, you'd have to do a bit more work in terms of your pricing and the kind of products and services that you will offer. For healthcare, we're seeing reverse medical tourism. So as of 2-3 years ago, we did a study and concluded that annual value of medical tourism by Nigerians going abroad came to $1.8 billion, billion with a B. Of course, 900 million of that went to India. And what we're finding now is because of the state of the global medical community, especially in the US and in the UK, a few procedures are seeing a bit more demand here in Nigeria. So you find people coming into our Evercares and so on and so forth. So there's a demand for healthcare services, whether it's primary medical or whether it's surgery and so on and so forth. PropTech has been hit this year with a bit of transparency issues. Some, so to speak, bombastic headlines have come into play, but then there are still quite a number of startups that are quietly making progress. I think I will just round this up here so that we can further engage and ask any questions. Should you want to get the full report, it's at our website, northcourtrealestate.com, or you can scan the QR code on the screen. If there are any questions or contributions, I'd love to have them at this point. But with that, I'll hand over to Mr. Davis. Thank you very much for having me here.
Thank you, Ayo, for your very comprehensive review of the half-year outlook or half-year review of real estate in Nigeria. I think what the first takeaway from this is how, I think, broad the market itself is. In fact, someone wrote, how can one get started in real estate investment? And I cannot begin to imagine where one wants to start with that kind of question. However, we will continue by asking Mr. Akin Opatola, who is the president of Fiabci in Nigeria, the Nigerian chapter president. Akin has a very robust real estate practice, but also being in tune with his members can give us an idea of what their sentiments are or what their experiences are over the year. And hopefully we'll be able to clarify for many of our attendees what is actually going on. Before he comes on, please, there's a Q&A button. If there are any questions, please put them in the Q&A section, and then we'll take them at the appropriate section. But right now, Mr. Akin, the floor is yours.
Okay, thank you very much, Mr. Victor Davis, and good afternoon, everyone. So thank you for the report, Ayo. I just wanted to mention that at least Northcourt is doing a very good job trying to help bring data and transparency into the market. I was just going through the JLL Transparency Index. Notice that, yeah, in your report you stated it as we're 64th place. We have a long way to go. And you see a lot of the sentiments that we see now is because of lack of data, and this information are really scarce. So well done, Ayo. Yes, so for me, I'm currently the president of the local chapter for Fiabci. Fiabci is like a professional international real estate club where you have players across the real estate ecosystem. And the interesting thing about the Fiabci Association is we have architects, developers, investors, we have interior decors, finance guys, business people, developers. So it gives you a wide view and cross-pollination of ideas and information when we share. So just to give you an overview of, at least from a wide array of my colleagues that I've been speaking with January to date, what has been the market like? So a few things. One, and I have them written down as 4 things actually. Number one, this period is of remarkable change, and we can see that in the Northcourt report. 2, we are in new and constantly evolving real estate landscape, and the sooner we understand that, the better. 3, high interest rate cycle. The macroeconomic indices that we see is huge. A lot of the things I'll be saying today, and a lot of the things that my co-panelists, and I'm sure even from the data that Ayo has shared, will be about interest rates. And when I speak about interest rates, I'm also talking about the mortgage rates, I'm speaking about inflation, and I'm speaking about the current exchange rate as regards dollar rates. So, and lastly, it's a period of uncertainty and price discovery. So for us, and let me first speak generally for myself, if I need to compare this first 6 months to how it was in 2023, I would say it has been slightly fair. I wouldn't say the market is too damp. And when I speak because 80% of what I do is on the brokerage side, sales and leasing. And because we are comparing this to 2023, I know 2023 being an election year, slightly sluggish, people will want to be a little bit conservative. So comparing it to last year is a little bit tough. From the developers side, Fiabci members that I've spoken with, they've seen a lot of opportunities here. There are huge challenges, so most of them have been able to think out of the box, especially when they do off-plan pre-sales. So they know, majority of them know that going to the financial institution, trying to source for funding is tough because of those double-digit 33, 34% that these commercial banks are giving. So they're thinking out of the box. A lot of them are very creative. They are doing crowdfunding. They're doing interesting lower-end pre-sales. So they're bringing in these funds to be able to augment their own part so that they can be able to fund their development. Of course, some of my colleagues also, developments have slowed. For some, developments has been very sluggish. But all in all, I would say that it has been fair. And this also speaks for me generally. Thank you.
Thank you very much, Akin. Thank you. I was just a bit unsettled there as I was delighted to see that Mr. Gbenga Ismail has been able to join us. I hope it wasn't that he was concluding a transaction and then put that over us rather. Gbenga Ismail is the chairman of Nigerian Institution of Estate Surveyors and Valuers, the Lagos State branch, and he virtually has real estate in his DNA. His father, Otumba Ismail, was very well known in the real estate industry and was actually president of Naives as well. So Gbenga has a very good pedigree when it comes to real estate and assessing the market. Since he's settled down now, I'd like him to contribute to the discussion. Gbenga, please, can you share with us your personal understanding of where the market is at the moment, topical issues for investors and other stakeholders, and also we are particularly interested in your members' views on the market sentiment, as it were. Thank you, Gbenga.
Yeah. Good afternoon. For my late entry. I'm not sure whether it's technology or what the issue was, or whether it was me. Maybe I need technology. I need a training in some of these things. So I'm not sure what really happened, but thankfully I'm here. I missed the intro, but since you asked me what's my view of where the market is, and I'm going to use the word for investors. You see, currently, we have seen prices go up, values go up in the market. Okay, but ordinarily, you would imagine that that should be good news for investors, but it isn't good news for investors because we're not in the investor segment. Investors, the return on investment for an investor is still poor. We're still, in terms of returns, below what we will say risk-free investments. So let's put it this way. If you put your money in treasury bills at the moment, you're getting 22, 25%. But if you did that with real estate today, you're probably doing 5 to 6%. So you can see the difference. But then prices are still going up. Effective prices are still going up. So rentals have gone up. Capital values, as you know, have gone up as well. So what is really the issue in this particular case? The economy is not doing well. So you have your FX issues going on in that place. So investment-wise, we are not yet where we should be. But then again, rents and values from 2023, same time, this year on year, August 2023 to August 2024, we've seen prices increase almost 100%. But still, as an investor, I'm still not happy. That's basically where the market is.
Okay, so we understand that there are challenges, and I think we also will look at the bright spots. And I want to speak to Ayo now. Yes, there are challenges. We understand the environment. It's fast-paced. There are issues with FX. We don't know where FX will be tomorrow. We don't know what inflation rate will be, even in a month's time. But there are, as you showed in your report, many aspects of the real estate market where one can at least make, better than average returns. If someone came to you with this question, what would your answer be?
I mean, there are a number of things I could say depending on who it was that came, but I will try and speak generally, and then if there are any specifics, I can always take that offline. One, I still think the market for residential is strong, like we saw over the course of last year, even going as far back as the pandemic, if we want to use that as a benchmark. Residential for luxury, residential for mid-market. But the challenge is it has to be in the cities. It has to be close to the CBD. That's really where the challenge is. If you're going anything outside the central business districts, then you can expect reduced rent. And that's what no one really wants to deal with. That's one. I still think the market for primary healthcare centers is strong, whether it's diagnostics and lab type work, that's also strong. So neighborhood clinics and so on and so forth. And then on the back of that, neighborhood retail. Neighborhood retail is also doing well. Then again, you also have to set it up a certain way. Warehousing is doing really good. And the beauty about warehousing is it doesn't have to be grade A. So if it's grade B plus, grade A, that's also doing well. And the reason is that what has changed in the demand for retail products in Nigeria has been the quality, right? The different versions of groceries have changed, but the demand is still there. So logistics and warehousing are still doing fairly okay. So off the top of my head, those are the ones that I feel you might want to pay some attention to. In terms of offices, I wouldn't really advise that you go into office 100%. And for many of the developments that I have just outlined, as best as is possible, going with the mixed-use development approach will more likely serve in the long term. And that's especially when you take the pessimistic investor approach. Mr. Ismail has pretty much told us how we need to view this, and I couldn't agree more. The exchange rates right now are being held, and it's not entirely clear what the forces are in play that keep them at that. And we don't know if it's a temporary reprieve. We don't know if the descent will continue to 1,800, 1,900. So any real estate investment right now, especially if it's a multi-year investment, generally has to think along the lines of mixed use. Except you're going luxury, then you can go to town with your residential and your high demand areas. But if you're doing mid-market, upper mid-market, then I would say, a few things that I said earlier, or you just do your mixed use development and follow it gradually.
Thank you very much, Ayo. Well, our sister publication, High Brow Living, actually had a webinar a few weeks ago. And so those who are interested, they can send us their emails and we can have the cloud recording sent to them. But Akin, your Fiabci has a very wide range, including architects, in terms of professionals, including architects and developers and so on. And so I want to look at the development pipeline now. Have you heard of people slowing down in terms of development plans? Have you heard of developers scaling back? Or are we still expecting that the usual supply is going to continue this year?
Yeah, thank you very much. So the quick answer to that is yes, the supply would continue. So last year, a lot of people were cautious. So because being an election year, so this year they want to be able to move up quickly. We've seen those typical drivers that we all know in terms of the population, Lagos being attracting a lot of investment naturally, the urbanization, people want the desire to own homes. So I know several developers, I don't want to mention names, that they have cult followerships. So you hear them doing 3-4 developments in different sprouts, Lekki, Ikoyi, Oniru, because they have these followers and people just want to jump on that bandwagon. So we hear these challenges, but we all know that where there are challenges, there are also huge opportunities. And historically also in this country, real estate has usually given us very attractive returns. So within the last few years is when we've started to see this quagmire in the market. But be that as it may, what I feel is because the economy is not too stable, and this goes back to the conversation on the inflation. Once we can get a stable economy vis-a-vis the inflation, because real estate mirrors the economy, then you see a lot more demand, you see these supplies being taken up, then things will go right back to the way they were. Thank you.
The real estate mirrors the economy. Is that right? Because at times you find that we in castles will write on their economic times only to find that real estate is powering away. I don't know if Gbenga can help us in trying to assess the real demand for real estate. Ayo tried to count the number or give us a report of the number of millionaires in Nigeria. And when we had a webinar on the same issue, the challenge was that there are quite a number of shadowy millionaires, if you will, who one does not really know or cannot assess even the source of their wealth. So if it comes to demand, Gbenga, have your members been seeing a slowdown? Is the appetite for property purchase still high? What are your thoughts?
Yeah, thank you very much. It's interesting when you say real estate mirrors the economy. So it does, but it's only affecting the investment side, I keep saying. But you see, demand is increasing because we have a peculiar challenge. We have housing deficit. People they have to live in homes. So either you're renting or you're buying to live in. So of course, if we can chart the, if we can get data that tells us how many people are buying for their own purpose, that's on the increase. So demand, and that's why developers are doing well. So the developers are actually, the supply from the developer end is also increasing because people are buying the homes that they are building. There is no glut in that. And so where you can see what is happening is that if you go outside of Lagos, go to Ogun State, even within Lagos, go to the areas where are not too popular. Like you find people in Ikorodu. I was in Ikorodu the other week. They are building in Ikorodu for the market. In the past, in Ikorodu, you find someone building for himself. Now you are building for people to come and buy from you. So there's a market there, a commercial market there, but people are buying for their own purpose. Same will soon happen in Ekpe. Right now, we'll then have estates coming up there, people building and buying for themselves. So that demand for owner-occupier, let me put it that way, is on the rise. The demand continues. But for the investment sector or segment, where you're buying to rent out, that has paid. We don't see people buying altogether the second home, the second buy-to-let sort of thing, if I can use that term for Nigeria, because the return is just not there. People struggle to wonder, should I put money in this development? And then wait, if I put 3 billion in the treasury market, I am getting 600 million out. Those are the questions that need to be answered. Investment segment really has failed, has slowed down, but the demand for people buying today, the effective demand is for those who want to leave. The first home buyer, let me put it that way, the first home buyer, that is on the increase. The demand there is definitely rising. And that is what is related to the price increases that we see in the market. You would ask yourself, if the economy is going this way, why are prices going up? There's demand. It's not just inflation. There is also demand, because inflation can do one thing, but if nobody buys a house that is highly priced, then it will have to come down. And then the market will clear, nobody will build again. So the market has a way of adjusting itself. It is recognizing demand, and that's why prices are going up.
You know, if you don't mind that I just jump on the back of what Mr. Ismail just said. The fact that the residential market right now is pretty much partially driven by owner-occupier buyers. It's reflected in the increased development activity per location. So when you look at the outskirts, so he just said Ikorodu, it's the same thing if you check the Abijo areas, right? All the outskirts are seeing quite a bit of increased demand for residential, and that's because it's owner-occupiers. People are buying their first homes, like we just heard, right, to be able to stay. Now, the market for buying real estate investments, residential especially, for the purposes of getting rental income is back again in the ring with your risk-free treasury bill flying high at 23-25%. What I would just want to land on, because I know you want to say something, is let's also include the demand from the diaspora market. I do know that as well as we have cult followership of some developers, we also have those followers abroad, and you find that in some cases, 60% of the assets are already spoken for as far as the diaspora is concerned. So pick developer A, who already has a plan and is asking for upfront payment so work can move. You find out that it's really only 40-45% of those assets that are available. 60% are already taken as far as the diaspora market is concerned. We did conclude that study 2 years ago. We did see it a few years before, but it's been consistent since. So.
Good. So my takeaway from this is, if you want to invest in real estate now, you're better off putting money in with a developer who's going to then turn around the product, and then you can get a share in it. I think that's at least one good thing to take away from this webinar. Yes.
Sorry, just to add about this diaspora market and its impact and effect on certain markets. So I'll give you two in Ogun State, Ijebu, and also in Ibadan. There's an increased activity of developers. Now, some of them I spoke to have said to me that 70% of their inventory is sold to the diaspora market. And that has created a niche market for them. Because now they're able to, the interesting thing is that they're selling at 150 million, 200 million, which is above the affordability index in those locations. If you try to sell
locals are priced out.
Yes, the locals are priced out, but they are doing price movement to the diaspora who are buying these properties. So you cannot compete in the sector and say, I'm going in there to start doing development, whilst you don't have a diaspora backing. It's just not going to, it won't work in such locations. But they found this niche market in the diaspora community that gives them, because those diasporas want a place in their local community.
Right.
So they're placing value in that location. And that's also driving value in some locations that we're not even looking at.
Excellent.
You know what's even funny? Part of the selling points these developers use, aside from it's a place in your local home, is that you won't have as many legal loopholes as you would have if you are going to Lagos. That is a legitimate selling point. They say, yes, you will have a place at home for your family. It's more local, it's more ethnic. You can tell your people that but then if you've been in some of those discussions, they also say things like, and here, our legal processes don't take as long, it's not as convoluted, unlike Lagos State. And, you're wondering, where's that coming from? But yeah, it's really something we're seeing where, and I didn't have as much time, I would have also touched on it, where you find, so the phenomena we just discussed now about residential, owner-occupier, all of that, it's the same thing, but for lock-up shops in Eastern Nigeria. So you find development coalescing around niche areas, right? So you find an emerging luxury market, at least by pricing, in Western Nigeria. Farmland is following suit. And then you find lock-up shops and plazas up to 3-4 floors in the East. So that's really how the market is. But I couldn't agree more. It's spot on.
So to summarize, basically you follow the money. Where the demand is where you will get returns. So the takeaway really is that the old and quote unquote tested measures or tested avenues to make returns in real estate in Nigeria has significantly shifted. Now we know that the Federal Minister of Finance raised the issue of mortgage, a federal government backed mortgage system based on the pension funds. Does anyone have any contributions on that, and also on the question of financing to purchase real estate? Is that going to be a change? Are we going to see any developments in the coming months or even next year?
Sorry, I missed that. I think I got cut off for a second.
Okay, so
can you repeat that?
Yeah, so basically there was the issue of affordability with the diaspora Nigerians pricing out the local community. Now, the federal government has been planning a diaspora mortgage, but also recently the Minister of Finance, Mr. Olawale, had mentioned that there would be a mortgage system backed by pensions. What do we see in terms of financing of real estate for purchasers? Is there going to be a change next month, next year?
No, there's not going to be a change. I think there's a lot that needs to be done to be able to provide the long-term funding that would enable quick transaction. in real estate. So let's see the impact. In Nigeria, we probably do, and this is not backed by any data. I'm just speaking, transmitting and data of other things. We probably do 100,000 transactions a year. What I'm saying is that homes, how many homes are sold in a year? Now, if you compare it to where mortgage systems are well-founded and deep, they are doing maybe 5 million a year in comparison, whilst we're doing let's say 100,000. It's because of the mortgage system. In a month, the 100,000 that we do a year is what they do in a month or probably a day. Again, because of the mortgage system. So what we need from the government is a system that allows long-term funds to back real estate projects. If we don't have this in place, the market will continue to be very narrow, and the rate of return will not be as an investor is expecting. So where are these long-term funds? We need to be able to, pension is one of them. Pension funds remain one of them, because everybody that has a pension already has a long-term retirement benefit that they can actually tap in early enough. So things like payment for deposits. And the interesting thing about real estate is that real estate backs itself. It's not a risk investment. If you purchase property, as long as the title is secure, then you know any fund that backs it is also secure. Now, the second one we're looking after pension is life insurance, which is another avenue. If you have life insurance companies that can put funding into the system, that again would open up a certain field. The third one, which we don't have because of the economic circumstances that we face, is saving. Nobody can save at the moment. So you don't have free funds available to move around for real estate. That's why everybody is using short funds, which is the most expensive type of money to buy real estate. You know?
Okay.
So I don't think anything is going to change tomorrow if certain fundamentals are not immediately addressed in the system.
Right. Okay. Now
I think
we'll be getting some comments about
just one statement on that, please.
Yes.
I also think it's maybe a bit more focused if our central government put more effort on improving housing supply. I think that's really a difficult nut to crack. You see, because even if we were to get a mortgage of however amount, if supply is still as challenged as it is now, the mortgages, the assets bought won't be as many, and it won't run as far as it should. So I was expecting, and I still think they have it in the works, that some announcements will come around easing the creation of real estate assets. We have to increase the volume of assets in the market. That way, we have some kind of a control on how pricing escalates. And that way, mortgages can do more. Because what's the value of the mortgage I want to get? What is the value of mortgages per person that the central government can afford? And what can that buy? Because supply hasn't been dealt with. You know, we're just dancing around the campfire, you ask me.
Right. What I think I'm getting from the webinar is that the discussions, especially from the questions that have been asked, is that the real estate in Nigeria has actually broadened in terms of scope. And it might make sense, I think, in the future to have webinars on specific titles, because we seem to be just running from one end of the discussion to the other. Because some people have mentioned in the charts that event centers are good money spinners, shortlets also. I don't know if there are others or you want to speak on that, Mr. Opatola. Is there? what are you seeing in those spaces?
Okay, so before I jump on that, just to add a few things based on what my colleagues have said. So I also think that, yes, in terms of any policy changes coming within the next, between now and year end from the federal government will not, it's not realistic. But interestingly, we've seen a lot of these developers and investors think creatively. If you notice that there's been an increasing number of joint ventures, even in this market, where landowners cannot access funding, and developers too that have some seed capital can come together and create a marriage of convenience. So it has been a lot rapid. We've seen also where developers that have access or have maybe a second citizenship, they get single-digit interest, come back into this climate to do sole developments. But the challenge there is that they have to price in Forex so that they can also hedge. So we've seen those there. But back to your question, Mr. Davis. So I hear you as regards the shoplets and also event centers. Those are location specific, and it also has to do with if you have the right model. I've seen instances where you see two shoplet apartments in the same location, and one is obviously doing better than the other. Can you drive traffic? So if you can understand the fundamentals and you know the business model, then yes, those areas are not too bad. There are other areas too in this real estate space that have been quite interesting, because commercial is suffering because of the advent of and the advantages of remote working. But of course, land banking too is quite interesting. Put it there, get good title, fence it, and be checking it gradually, especially where is in close proximity to large infrastructure developments. So the proposed 4th mainland bridge, we know that even as far back as 16, 17 years ago, when the idea was even dropped by the current president, the then governor, Bola Ahmed Tinubu, a lot of people had gone to go and purchase land there. People are doing it even up till now. The Lagos Coastal Road too, people are taking all across the nodes from Lagos all the way to Calabar. People are taking positions in that area. The rehabilitation of the Ekpe Ibejuleki axis too, people can play in the area. So there are so many diverse ways where people can play in this space. Thank you.
Okay, there's a very interesting question very quickly, and I think Ayo and Gbenga will find this interesting. So the attendee is asking that shouldn't the government reduce the rates on its securities so that investment in real estate becomes attractive, and therefore the supply of at least rental property can be eased? What are your thoughts on that? So
yeah, well, the government it's competition. I mean, government needs funds, so they have to attract investments. So I think the return for real estate can thrive if it's if we can't go to 20%, really. Usually globally, I mean, interest rates have to drop. It needs to drop, but it can't drop in Nigeria because Nigeria needs money. It's such a peculiar situation that the federal government needs funds, so they need to attract people to give them funds. And the only way they can do it is give this sort of high interest rates. Now, real estate cannot push its own return to 30%. Because it just becomes crazy.
Right. Thank you. We will have to be limiting our answers because the questions are coming in thick and fast. One of the things that Mr. Akin Opatola raised was the issue of the 4th mainland bridge. And we know that transport infrastructure actually affects real estate, especially when it now makes it more convenient for people living in an area, having good transport links. And I think we've discussed this, Ayo, on the blue line. and the rather non-impacts, would we say? We expected that the blue line would have significant impacts on places like Festac and the like. What happened?
You know, the answer to this question is pretty much contributing to the answer of the last question, which is, why do we have to increase our rates so high to attract funding as a country? Because I did a study on Côte d'Ivoire early this year, and when they were going to attract funding with their own treasuries, they didn't have to go so high, because when the country is run a certain way, you don't have to pay so much in terms of interest to attract foreign investment to your treasuries, and therefore, as a consequence, your real estate markets don't suffer as such. Now, to the current question on our rail transport, it's not as efficient as it should be. We did a report again on the blue line. It's taking about 13, 14 years to come to light. And it's not carrying as many people as it should. It's not having as many trips as it should. And the thing about transport is it has to run on efficiency. So the volumes per day, the volumes per trip have to be significant. And it's pretty much the same challenges we're beginning to see in the Abuja rail project. So Festac won't have as much benefit as it should. The nodes along the blue rail line will not see as much increase as quickly as it should in its land and property values, because the trips are not enough, the volume is not enough, and the system as it currently operates is inefficient. So it's not just transportation, which I agree is the way to go, but it's efficient transportation. We have too many people to be jumping on vehicular transport every time we want to move between places. And until we can find a way of efficiently distributing or redistributing a large number of people, property values will not see the kinds of benefits that they have to see or that they can see from infrastructure improvements.
Okay, like we said, the questions are still coming in thick and fast, but I think this is specifically to both Akin and Gbenga, which is, what are the industry leaders doing about the specific issues in real estate? We're talking mortgage, we're talking how long it takes to register a title and all that. Is there anything we should expect from Fiabci and Naibs?
Thank you very much. I don't know who asked that question, but good one. So for us, the best we can do, we try to create pressure groups and trying to do as much advocacy as we can. Intermittently, we meet with the regulators, across board, Lagos, Abuja, and try to push these concerns of our members, and the consumers forward. We know we're not there yet, but we'll continue to push that conversation and agenda.
Gbenga, what's Naib's position? Have we lost Gbenga? Hello? Hello?
I think it is network. You should join back soon.
Okay, was I lost?
No.
No, we can hear you. We can hear you.
Oh, okay. Well, the final question we want to deal with before we leave is on cost variation and off-taker sales. We in Castles, we saw that the cost of building our Castle lifestyle model house went up by about 25 to 28% between January to June this year. And obviously, one of the tried and tested ways developers are using to finance building developments is by having off-plan sales. What would we say, and I'm throwing this to the whole panel now, has been your experience in managing this rise in price, this variation in cost?
Okay, so for me, yeah, for me, well, it is sometimes it's worrisome, and sometimes it's weird. So, but of course, it's expected because of inflation. We are all, especially developers, investors, they are rational. So everybody wants to benchmark. Nobody wants to go into a project and fail. So every time the prices of building materials, which is about 70–80% of building a home, shifts along with the Forex, of course, there have to be a tweak also in the sales price, whether it's at the end user or at the off-plan stage. But, you know, like Mr. Gbenga shared, water will find its level. These prices seem high. If you look at banana rates, look at body loan rates, and you see it has also cascaded even up to Lekki phase 1, 2. Both land prices and development is increasing. Ikate also, as Ayo shared in his presentation. So it's everywhere, it's across board. But the demand is there. People are taking up these homes. It's quite an interesting time in this market. And I say that for me, I see that in the not too distant future, maybe between now and tail end of the year, it's likely that this kind of rates remain the same because of on the backdrop of inflation. That's the elephant. That's the elephant in the room. We're seeing 2-bedroom prices in VI going 200, 300 million at off-plan stage. So imagine even upon completion. So, but there are opportunities there across all parts of the ecosystem. Thank you.
Okay, thank you very much, gentlemen. I think we've reached the point of the session where we would like you to round up. What I have taken from this session myself is how broad real estate has become. You know, we started publishing and reporting on real estate in 1999, when you could drive from Lekki 1 to VGC in all of 6 minutes. That was because there were virtually no developments along the road. The estates that were being built then have now matured, possibly seen 3 or 4 owners since that time. So we're trying to make sense of the market, and I think I'll start with Gbenga to just round up and conclude, and he can use that opportunity to tell us what Naives is doing in terms of lobbying government on all the real estate issues that we have in the country. So Gbenga, you have the floor, Mr. Ismail.
So I was cut off a bit. So the first question, I think I missed half of it. So in conclusion, you said, will prices remain the same? Is that what you're asking me?
Well, we can conclude based on all what we've heard today. You can sum up for us what your own opinion is and what you want to share with the attendees.
Yes. My philosophy has always been that we have not achieved peak prices yet. Whilst we have seen high prices go up, we're seeing this as a result of inflation and increased demand. Why do I say so? Demography and urbanization are the factors that lead to high prices. Now, if the economy gets better tomorrow morning, we would have a big problem in our hand. We would even have more demand and very little supply. And that becomes a big problem. Right now, it's the prices for the banana are high because the supply is very thin. Maybe about 10 houses, 20 houses at any point in time in that sort of location. So prices are still going to go up, whether we like it or not. It is still going to go up. So we shouldn't entertain and hope and be looking for prices to come. We have too many people needing homes. And that's the real factor causing price increase. It may slow down. It's only slow down when there's real hardship. Like 3 years ago, post-COVID, and then the economic situation, people did not have so much money. But when they settled, back middle of 2023, we saw the jump in prices. We went back to how galloping prices, as I called it, 2018, 2019. And that's really where we are now. It's going up again. So one other point I wanted to touch to is the cost, construction cost variation as a result of inflation. Now, for developers, it's a big issue, contract issue, because from an offline sale, imagine going in at 70% of your real cost, and then prices shoot up by 50%. Meanwhile, you sold at a price 70% below what your prices are. How do you adjust for this? It's been causing a lot of issues between developers and then the off-taker, because they feel it's contractual and they should not be made to pay for any difference in price, especially as they pay their money upfront. So it's been a challenge, it's been a contractor, but really the market is the situation it's in. No developer will build below his cost going along with. So they've been forced to review their prices regularly. So the only way around this is for you to pay 100% and not pay in installments. Pay 100% in advance and then enjoy your discount, which usually is about 30%. At that point, I don't think anybody can come back and meet you to where I'm called. Now, regarding naives and what are we doing advising the government, one of the biggest issues I think government is facing today is an issue of quality of development and design, and then the quality of the neighborhoods that are being built. So I think for me, the two biggest challenges are where we see deterioration. Now, these two things affect value. If you design, you find out that, as I think Akin mentioned before, people have followers. The only reason those developers have followers are improbable. They have shown that they develop high quality products, and people are staying with them. And by referral, more people come to them. Now we have a lot of charlatans in the market who because they have some money, start building. Build against regulation, build low quality. And there's nobody supervising this process. The end of it is that's why you have people putting products in the market for sale that spend months, nobody's buying them. Eventually somebody comes to buy it. That's where the problem is. Because the quality is not there and people are going around looking for what they can buy that's of good quality. But eventually somebody comes to buy the product. And that person is the person that suffers. Because when you have, at the end of the day, bad plumbing, bad roof, sub-quality experience, and then you have collapses, building collapses, the extreme end of this regulation issue, then we have low confidence in the market that we are all practicing it. It's the biggest challenge. And that's where we're speaking to government to say, look, we need to do something about supervision. We need to do something about regulation, and we need to do something about building codes. And that's the conversation there.
Sorry, Akin, can you jump in to round up from your side, and then we'll then take Ayo.
Thank you. So a few of my takeaways. One, the market is extremely resilient. we have strong demand. I think it's on the subject I mentioned the opportunity in the diaspora market. And also just to add a few things. So I see a lot of opportunities, massive real estate growth in the Ekpe environs. I think people should also begin to put a touchlight in that area. I think there will also be a nexus between affordability and accessibility. And I say this because of the Lamata red and blue rail. But ultimately, and in conclusion, I think, and this is speaking to government also, that policy and leadership needs to take the driving seat. Thank you.
Thank you. Ayo, could you let us have your closing statements?
Oh, thank you very much for having me here. To all our speakers and participants, it's been an absolute honor being here. So the last 6 to 8 months of performance review of Nigeria's real estate market does suggest that there are opportunities for investment, but they are increasingly in niche areas as far as Nigeria is concerned. So we're looking at residential on the outskirts, we're looking at warehousing near city centers, luxury apartments also, land banks, like I tried to say earlier, and also the increased investment demand for farmland. Ultimately, the central government will at some point have to go beyond announcements, as good as they are, and tackle the issues head on. We need to find a solution around improving the supply of real estate assets, starting at least with residential, mid-market, and lower middle income, and even social/affordable housing. The deficit, as far as housing is concerned in Nigeria, is still around 28 million, even though there are a few arguments that suggest it is higher. So it's good that we have the attention of the government. It's now a matter of where do we direct that to. We need to deal with the part that has always been an issue. And as Mr. Ismail said, there are quite a number of policy issues we need to revisit. Ultimately, if we don't have an improvement in supply, pent-up demand will continue to ensure that pricing remains higher than what the economy can sustainably contain. But I think with that, I'm sending the slides to you, sir, and the summary of the research report so we can get it across to every attendant and every speaker. So with that, I'd like to thank you. Great work you're doing at Real House Communications since 1989. It's not as easy as it sounds or as it looks. So well done to you and your team. Thank you very much for having us here.
Thank you, Ayo. And I think the attendees will agree with me that this has been a serious eye-opener. I think in Nigeria, we tend to believe in myths. We tend to believe in certain assumptions. And it's always good to sit down and actually look at the facts and speak with the practitioners to be able to get the right sentiment around the market, if you will. So we're ending with a very, I would say, contrarian view that there's even a supply problem, where I think most might have been saying there's a demand problem. What I think has happened is that demand has changed from what we used to know it as and from who we used to know it as. So what you get now, as we can hear from the various speakers and the panelists, is that there is the right priced house, the house in the right location for the right buyer. The challenge is merging those two. And so we used to find before that if you build it, they'll come. And I think what we've learned from the last two sessions, this and the one on the luxury real estate, is that you need the input of professionals, such as spoken today, unlike in the past where basically you just build, everybody's building terrace houses and you build terrace houses. We did not go even into the typologies and into different types of units and how they attract different people because of time. But what I think we're all getting out of this is that there are those who know the market, and in these very, very interesting, some may even say perilous times, you need the input of experts more than before. Just assuming that you build it and everybody will be renting it or buying it, I think those times have passed. So what I may suggest is that it makes more sense to get Castles, which is published twice a month, because we try to track what exactly is happening. My apologies to those whose questions we could not take. There were just so many of them, and we're extremely conscious of your time, and we wouldn't want to take more of it than is necessary. But we have noted the questions, especially those that are not anonymous, and we will do our best to engage and have you answer them. This is not the last seminar. I hope you would also click and accept the other offerings we have over the rest of the year. We're definitely going to do something on facilities management and something else on mortgage and financing. So those who are interested in investing, despite all the red flags, we'll be very happy to have you there. So again, I end by thanking our panelists. Ayo, you've done a sterling job and continue to do good work at Northcourt. Thank you very much. Mr. Akin Opatola, Fiabci chapter president. We're expecting the world, they are bringing the world to Nigeria in 2025. So that's something to look out for. And obviously, and also Mr. Gbenga Ismail, thank you so much. And to our attendees, thank you so much. We hope you got a good feedback from this, and we look forward to having you another time. Thank you, and bye-bye.
Thank you very much.
Thank you.
All right, bye-bye. Thank you.